welcome to my channel. Today we're going to be talking about debit and credits. We're going to be actually reviewing them and normal balances. So if you want to be successful on the UIL test, one of the things you need to make sure that you are very good at is looking at an account and telling it if its normal balance is a debit or a credit. So I'm giving you an acronym called DED-COIL. This may help you when doing these on the test. So DED is the debit side. So D stands for debit, E stands for expenses, advertising expense, utilities expense, and rent expense. Assets, some examples are cash, accounts receivable, supplies, and prepaid insurance. And then drawing, which is when the owner takes money out for personal use. So all these accounts, when you want to increase them, which is the normal balance means to increase an account, you would debit these accounts. However, if you want them to be decreased, then you would actually do the opposite, which would be credit these accounts. Now, let's look at the credit side. So again, these are the accounts you would credit to increase them. These are their normal balances, the credits. So owner's equity, capital is an example. Income, which would be sales, that increases. And then liabilities, accounts payable. And again, if you need to decrease any of these accounts, then you would do the opposite, which would be to debit these accounts. Hopefully this has been helpful so you can recognize the normal balances of these accounts. As I said before, a lot of the UIL test will have at least 1 to 2 groups where you have to know the accounts and their normal balances. Well, thanks for listening today. Make sure you hit subscribe, hit like, and if you leave any comments in there with questions, and I'll try to answer them. Thanks, and see you next time.